All right, greetings all. Thanks for tuning in here. Let's take a quick look at what we should be watching this week in the markets. What do I want to bring up first? All right, well, I'm on this page here, so we'll start with this. So 10-year interest rates heading down. This should be bullish for equities. Obviously, we have a new president. I would assume that's going to be bullish for equities, at least in the short term. But rates are down about 5% just in the past week or so. Another thing that I think is bullish for equities is this sentiment survey shows that there's a very small amount of people out there that consider themselves bullish, and there's a lot of people that consider themselves bearish. As a matter of fact, this is the highest bearish reading in a year. Now, why is this good for the market? If you have a low amount of bullish people and a high amount of bearish people, this is what we call a contrarian signal. It's sentiment. It's market psychology. And basically, it's pretty simple. If people are really bearish and there's very few that are bullish, well, they sell. And then the market runs out of sellers. And when a market runs out of sellers, the only way it can go is up. So interest rates coming in, you got some bullish sentiment. Well, how do I say this? Sentiment that's bullish. Let's just put it that way. All right. Now, a couple of you have asked about natural gas. So we're going to go take a look at that. Yeah, I mean, I don't know. I don't see a trading idea here. This is too choppy. Let's look at oil. All right, now we're going to have to follow up on this. I don't know if this is an idea yet, but it's a pretty big reversal, and a lot of times this is actually a good chart to look at right now. People ask me all the time, like, how do you know if something is a breakout or if it's a false breakout? Well, when the levels that were resistance become support, that sets the stage for a new move higher. All right. If that doesn't happen, we can come right back in. And this is what we call the old false breakout. And now, false breakouts in and of themselves are good contrarian signals, meaning they're good bearish signals. When things have a false breakout, they tend to head lower. I mean, you can even arguably say this was a false breakout. See, on this particular day, it got up here. It looked like it was going to be another up day, but by the close, we were all the way back down. How can a retail trader who doesn't trade futures get exposure here? You can look at this oil fund, USO. You can look at some of the oil stocks. Let's take a look at Exxon. Oh, you know what I was thinking about? If Trump gets through a flat tax, and I'm all for that because our tax policy in this country is freaking ludicrous. There's going to be some real good short ideas here on like H&R Block and Jackson Hewitt and some of these other guys. Okay, now let's go look at the sectors, and we can go look at this. This is the fact sheet for the SPY ETF, the S&P 500, and we look at the sectors, and different sectors are in charge in different times. One of the things about being a successful trader is knowing what to watch and when to watch it. But first thing we're going to, so we got tech, we got financials, we got consumer discretionary. Wow, consumer discretionary is really ripping higher. Can you believe when I first started, this energy was the biggest sector in the market 30 years ago, and now it's like 3.4%. At least I think it was. All right, S&P 500. We're going to look at that. Yeah, I don't know. Should be a pretty interesting day tomorrow. Let's look at our technology sector and let's see if we could find what we should be focusing on this week. I don't know about that. I don't really see much there. Let's see the financial sector. This is what we were talking about last week. If there's like kind of one thing to look at is the financials. Well, maybe there's other things to look at. But this looks like a breakout to me, right? Levels that were there's a good lesson to be learned on this chart actually. So levels that were resistance can become support, and this has to do with people that sell. And at first the market goes lower, and they're like, "Oh, this is easy." But when it goes higher, a lot of them say, "I made a mistake. I'm going to buy my shares back if I can get them for the same price I sold them at." So remorseful sellers from here placing buy orders over here. If there's enough of them, it creates resistance or it creates support at the level that was resistance. I mean, now here you can see the opposite. Levels that were support can become resistance. So resistance can become support. Support can become resistance. Certain price levels are more important than others. Support becomes resistance from buyer's remorse. People buy, and at first they thought they had the good idea when the market went higher. Finally, it goes lower, and they're like, I made a mistake. So if it gets back to my level, I'm going to sell my shares at the price I can get out at break even. I mean, look at this. This trades let's just call it 45 million shares a day. And look at how precise this is. Okay, the opening price on this day, 47.68. Opening price on this day, 47.70. 2 cents, man, on a freaking ETF that's $50. People overcomplicate trading. It really doesn't need to be that complicated. You just got to understand it's supply and demand. All right, let's go look at a couple of these other guys. Healthcare looks kind of neutral. Consumer discretionary, I mean, that looks kind of neutral too. Industrials. Ooh, all right. Gotta write this down. There could be some short ideas in the industrial sector. And remember what we just talked about. Levels that were support can become resistance. People buy here, and at first they thought that it was easy and whatever, they're going to go out and buy themselves a new Ferrari. And then we come back down and we go lower. So a lot of them tell themselves, if it gets back to my price and I can sell them for the same price that I bought them for, in other words, get out of break even, I'm going to. So it's not a coincidence that this is where this rally ended. Now, this is overbought. And as we know, a stock or a market or any financial thing that's overbought and gets to resistance tends to reverse. So let me just, because I know right now you're probably saying, like, Mark, what the hell are you talking about? The RSI indicator doesn't show overbought conditions. It's still in the neutral zone. The RSI indicator, with the default setting, is measuring 14 time periods. So it's measuring here versus 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's measuring here to here. It doesn't account for this rapid move higher. And it's not that there's anything wrong with the indicator. It's just understanding the nuances of it. Now, why would something sell off of resistance? Well, some of the people that want to sell start to worry that they're going to miss out. They think, the buyers are going to go to whoever is willing to sell at the lowest price. So I better reduce the price I'm willing to sell at. I don't want to get undercut. Other people see that and they do the same thing, and you get a snowball effect. It's the opposite when you rally off of support, like we did here or we did here. The buyers know the sellers are going to go to whoever is willing to pay the highest price. They don't want to get outbid, so they increase the price they're willing to pay. Other buyers see that and they do the same thing. It's all psychology, right? Earnings this, whatever that. If you're a trader, your job is to understand psychology. Let's look at our communication services sector. Yeah, I don't see much there. Now, what we can do and what we're going to do over the week is, just like we can look at the sectors to get an idea of what the broader market might do, we could look at the stocks that are within the sectors for trading ideas. Now, for example, I think there's probably going to be a good chance that there's some trading ideas on the short side in the industrial sector for reasons that we just talked about. So if we go look at this industrial sector ETF, we could see the holdings: General Electric, Caterpillar, Honeywell, Uber, Union Pacific. And we could kind of just go through here looking for trading ideas. Remember, when we look at this, it's the sector, it's the aggregate of all the stocks that are in it. So just by definition, there's going to be things that look more overbought, things that are less overbought. Let's see with GE. I mean, I don't know. This is kind of interesting. But you see here, support becomes resistance. Remember, some price levels are more important than others. Support becomes resistance. Good traders know how to identify these levels, and that's what I am here to teach you. Not that I'm a good trader. I mean, I was at one point. But trouble is, I don't really do much trading these days because I got a couple different things going on with different funds, and I gotta, it's a real pain in the ass to get compliance to approve stuff. RTX Corporation. All right, well, you get the idea. Well, let me look at Caterpillar. I was actually picking up my daughter at college. Bringing my daughter back to college, and we drove by this Volvo dealership. They had all these really big tractors in the front. It was pretty kick ass. I mean, let's see, Volvo tractors images. Yeah, there were things like this. Yeah, it was pretty cool, man. I'd like to take one of those bad boys out for a spin. All right, let's see what else we can look at before we get going here. Just take a quick look at Bitcoin. Oh, please subscribe to my site too. It's only $20, and I give out a couple of trading recommendations every week. Whoever it was, someone sent me a nice donation of $500, and I appreciate it. Yeah, here's Bitcoin. Here's another interesting thing, right? We get support at former support levels. When we look at charts of different things, I think it's easier to kind of think like you're not looking at the chart of, say, Bitcoin or oil or whatever. You're looking at the chart of the people that are trading these things. And whether you're a Bitcoin trader, an industrial trader, an oil trader, a natural gas trader, people experience the same emotions. And this is what we see on charts. You tend to get resistance at former resistance levels because of buyer's remorse. People bought here. And when the price goes lower, a lot of them regret doing so. And they tell themselves, if it gets back up to my price, I'm going to sell and get out at break even. So buyer's remorse can make what was resistance become resistance, just like it can turn support into resistance. On the downside here, you get support at levels that were support before. This is the opposite. This is seller's remorse. People sell at the bottom, the price goes higher. When it finally gets back to their price, they're like, you know what? I can buy this back now at the same price I sold it at. I'm going to. So seller's remorse could keep support levels intact, and it can turn what was resistance into support. And buyer's remorse can keep resistance levels intact, and it can turn what was support into resistance. All right, so that's it, everybody. Hope you have a good night. And yeah, I'll be seeing you this week. Thank you.